Good day and welcome to another WizzWatch. This is your host Marlin Rolle. Today is Monday, October 27, 2008, and I have a few charts that I would like to discuss with you today. The first chart is a chart of the Dow Jones Industrial Average, and if you have a close look at this chart, you will notice that the MAC divergence is currently on the downside and needs to cross to the upside in order for the Dow Jones to move a lot higher. But this does show that we are currently still in a bear market, and also we had lighter than average volume on the downside today, but we need to have heavier than average volume above 1.31 billion on the upside in order for the Dow to move a lot higher as well. And also we are currently below our 5, 10, 50 and 200-day moving averages. The 5-day moving average is at 8,559 and the 10-day moving average is at 8,778. The Dow ended the day trading at 8,175, down 203 points or 2.42% on 1.06 billion trading volume. The Dow is currently down 2,674 points or 24.65% for the month of October. Next is a chart of the Nasdaq Composite Index, and if you have a close look at this chart, you will notice that the Nasdaq has basically been moving in a sideways consolidation between 1900 and about 1550, whipsawing back and forth, but it continues to move to the downside. And also, if you have a look at the MAC divergence did make an attempt to cross to the upside, but it continues to move down as well. And we need to see a move to the upside, crossing on the MAC divergence in order for the Nasdaq to move a lot higher. But also, please pay attention to the volume area. We are trading below average volume, and we need to see a move above the average daily volume of about 2.66 billion in order for the Nasdaq to move a lot higher as well. And we are currently also below our 5 and 10-day moving averages, and the 5-day moving averages as of right now is at 1,594, and the 10-day moving averages is currently at 1,658. The Nasdaq ended the day trading at 1,505, down 46 points or 2.97% on 2.2 billion trading volume. For the month, the Nasdaq is currently down 576 points or 27.68%. Here's a chart of the S&P 500, that's the Standard & Poor's 500 index. And if you have a close look at this chart, just like the Nasdaq or the Dow Jones Industrial Average, the S&P 500 has been moving in a sideways consolidation, whipsawing back and forth, but continues to move lower as well. But if you have a close look at the MAC divergence basically needs to cross to the upside. And also, if you have a look at the volume area, the volume is below the average daily, but we need to see a move above the average daily moving volume of 5.46 billion to the upside in order to see the S&P 500 move a lot higher. Also, we have the 5 and 10-day moving average. We are currently below those as well, but we need to cross above the 5 and 10-day moving average. The 5-day moving average is currently at 897. The 10-day moving average is at 926. But to end the closing session today, the S&P 500 ended the day trading at 848, down 27.85 points or 3.18%. The S&P 500, as for the month, is down 315 points or 27.12%. Here's a chart of the Volatility Index, or the VIX, also known as the Fear Index. This index is used to track investor confidence in the stock market. As for now, it shows that we are still in a bear market that is under heavy selling pressure due to investor confidence. The higher the VIX moves to the upside, the more fear there is in the market. The lower it goes, the less fear there is in the market. What I'm looking for is a drop in the price of the VIX, but as for now, it continues to move to the upside, making higher highs and higher lows. As long as it stays on this upside track, we will continue to stay in a bear market. The VIX ended the day trading at 80.96, up 93 cents or 1.18%. Last but not least, it's a chart of the oil index, that's light sweet crude. And if you have a close look at this chart, you will notice that oil pulled back from its multi-year high of $147.90 in July, basically down about 56% from that price high. And many consumers as well as investors were waiting on a pullback in the price of oil, but as of right now, they are getting exactly what they were hoping for. I predict that oil will pull back from where it is now to a low of probably about $55 per barrel before heading any higher. Oil might start moving to the upside much sooner than I expect, but cuts in supplies will not take effect until November, and then maybe again in December, depending on supply and demand. Oil ended the day trading at $62.80, down $1.35 or 2.10%. But for the month, oil is currently down about $38 or 37.6%. Please keep the oil index on your radar for a move to the upside in the near term. Thank you again for listening to another WizzWatch. Have a great day and happy trading.
This has been another WizzWatch presentation. These stocks are not buy recommendations. Please do your own due diligence or get help from a professional before trading.